Many traders and investors are surprised that the stock market, specifically the S&P 500, could close lower on the week. I am not surprised. You should not be surprised if you have been following me here. On Monday, I shared with you that I thought the underlying data, my own research, I learned a long time ago I had to do my own research, was telling me that I thought the advance of the stock market as those emotional traders, the emotional herd, sometimes they're mental, was becoming happier and happier, and no sprinter can sprint forever before they need to take a break. And that is what has been happening in the later part of the week. Just simply taking a break, absolutely natural, normal, nothing to worry about. In my opinion, I can be wrong. The other thing happening yesterday and today, I think end of month shenanigans. Today's the last trading day of October. Happy Halloween. I personally think that the stock market sometime next week can start to take off again to the upside. Again, I can be wrong. My other short-term research has been a little bit cloudy and a little bit frustrating. As I have shared with you, since early September, I first started seeing some negative divergences. Then maybe about 2 weeks ago, I shared I was seeing positive divergences. And then Wednesday and Tuesday, when the market was making brand new all-time highs, I was seeing new negative divergences all over again. So I think this is the continuation of that underlying technical seasonal weakness. Even though the indexes have generally continued to go higher, we have this underlying seasonal weakness, which could ultimately resolve itself either way. Either that weakness could be replaced with bullishness or bearishness. I personally think it's replaced with more bullishness, and we really have a great November and December, but I can be wrong. It can come down, right? I don't have a crystal ball. As always, I will be continuing to do my own research. If you want to know what it is, come here. If you want to know what it is immediately in the trades I'm making, join me. Click the link in my bio. So as of 2:30, the S&P 500 is negating the unconfirmed breakdown that we saw by the end of the day yesterday, below 6,836. As long as we can close above that point today, I think it's a little bit of a bullish tendency. Watch these levels. I'm loving natural gas over the last 2 days here. Today, at least as of about 2:15, again making another unconfirmed breakout above $3.39 a cubic foot. If on Monday or Tuesday the breakout is confirmed, natural gases on a technical basis could go even higher. My timing in getting out of my short natural gas trade yesterday morning was fantastic. Somebody not in a natural gas trade now, I think it's a bad time to hop in, because natural gas, as you can see, has already really run up. I don't want to run after a train, right? If I miss a trade, that's fine. There will be more trades. So somebody not in a trade, I would say exercise patience. Somebody long natural gas like I am, exercise patience and allow it to make you money. Somebody short natural gas right now, oh my goodness, you need help. The 10-year yield has bounced around some today, but as of about 2:20, really gone nowhere. We are still in that confirmed breakout above 4.07% again on the 10-year. I think it is possible technically for the 10-year to continue to rise. That will be good for anybody that is short their favorite bond fund like I am. At this point, entering a new long or short bond fund trade, I don't really like it. I wouldn't begin a new short bond fund trade now, because those bond yields have already risen up so nicely in the last 3 days. If anything, maybe just sit on your hands and wait for a bit, or potentially maybe the yields break down from here and start to come down. If that were to happen, a long bond fund trade could be the trade, but a little bit of patience. Now, nobody else is going to tell you that patience and sitting on your hands is the right thing to do, in my opinion, and I can be wrong. Why? Because they constantly want you to be involved in a trade. They want you to click the button. They know you release those endorphins in your head and you feel good in the present time. When you make a trade, you may not feel good later on, but they constantly want you in a trade. I know that nobody should always constantly be buying and selling. I would say a little bit more patience on gold until I figure out what I'm going to do with the second half of my position. Maybe I buy more, maybe I sell the rest of it. Interesting though that just about the price of gold today fluctuated between those two price points that I have outlined. On the high side between 4,066, on the low side between 3,984. I want to see this play out a little more before I make a move, so I will exercise patience. This is not investment advice, and if you don't know me, I'm John Crocker, professional investor, proud American, cigar lover, and owner of Crocker Capital, LLC.